Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Wednesday, and it looks as if we're still in this uptrend. It's we'll see how long it runs, but we are in a confirmed uptrend, and so now is sort of the time when it's best to start looking at you know deploying some of our capital out there and getting that moving. But interestingly enough, today, even though we're in this confirmed uptrend, Google was down 6%, and Microsoft was down a little over 5%. So interesting. We're starting to see some shift in terms of the leadership right now. It seems to be moving away from some of the software stocks that have been beaten down so heavily. And at least in the tech, it seems to be moving to the medical sector, as well as some of the chips. But and of course, we still have leadership in the oil stocks. So just kind of get into it here. If you follow and this is a great thing, if you follow our ETF strategy, the way this works is, if you are looking for kind of an easy way to manage and basically probably do better than many of the best fund managers on Wall Street, this is the ETF strategy. And actually, this was developed by Investor Business Daily, and very, very simple strategy, but it is a strategy that works like it just works tremendously well. And basically, that is that you pick an index fund. In this case, I'm using the Spider SPY, and whenever the direction of the market changes, that's when you do something. Well, basically on the 21st, that was Friday, the market moved from a marketed correction to an uptrend, a market in a confirmed uptrend. When that happens, you get the green arrow, and with that green arrow, that's when you move to all into a fund. In this case, it's the spider. It's the spider, and you can see that here as it as it's here. So here's the thing: on the daily chart, you'll notice that basically the follow through day was right here, and look, it's already moved up very, very significantly. So if you jumped into the spider or something like it, now what I did is I jumped in with what they call the U Pro. You can see how much it jumped up during that period of time. So this is a very interesting strategy. When the market direction changes, like it did on Friday, then that's the time to jump in, and then you can see this has moved right on up, right on up. So that's sort of how the ETF strategy works. We basically, whenever the market changes in direction, and it did on Friday, then you jump into an index fund. In this case, for this, we use the spider. But you can use the other ones. I typically am using UPRO because it's giving a little bit more leverage. Or you can use the QQQ, which is the NASDAQ 100. Now, here's the thing about the QQQ. Because it's tech heavy, I've stayed away from it because we're getting a change in the leadership in the market. It's moving away from some of the tech heavy issues like Microsoft and Alphabet to some of the more some of the other issues such as the oils, the medical sector, and thereabouts. So this is an interesting thing. It's called the ETF strategy. You might want to consider it. By the way, if you're ever in question on, has the market changed? What's going on? If you look at the thumbnail on all of the old Dallas trading floor issues, you'll notice that there's a circle right here, and this circle will be three colors. It's either green, that means this market is an uptrend. That means to go all in to a particular index. Then when it moves to an uptrend under pressure, then you'll see a yellow there. And then, of course, if it's in a correction, that will be a red arrow. So it's really simple. All you have to do, and this you can do this, on anything, is to use an index fund. In this case, we're using the spider, If on the day that it moves from the confirmed uptrend, you're 100% in. If it goes to uptrend under pressure, you're 50% in. And then when the market is in correction, you're out of the market, you're in cash, you're waiting for it to then move back into a uptrend. So this is a really interesting way to manage your funds. And believe me, and I'll put this out on some of my further issues here, further editions of Dallas Trading Floor, I'll show you the performance of this. This is an interesting way to trade, and it's a way that you don't have to pick any stocks. You just pick the market direction. You go 100% in, 50% in, 50% in cash, and 100% in cash. Basically, three conditions. So very, very interesting. I'll probably make some videos on this, kind of what the theory is on this, and a little bit later. But this is a proven methodology. It was invented by Investor Business Daily, and it has been back tested. So very interesting way to possibly do something like that. Here's the stock of the day. The stock of the day is In-Phase Energy, and this one is in the solar space. By the way, this is the number one area currently in the market, believe it or not. Now, it gapped up today. This is in the top 1% of stocks. Now, interesting thing about this company, it's an Israeli firm. They do not make they don't make the solar panels. What they do is they make the power inverters that turns it from DC energy into AC energy, and there's just a lot of demand for this in the way it's going. Now, there's a conventional buy point on this one at 324, and it's going through earnings. So let's look at In-Phase on the charts. PH, I think that's it. Yeah, PH. In-Phase. Go. Yeah, In-Phase Energy. And you'll notice we had a gap up today. It pulled back a little bit to 291, but you can see right up here, there is a buy point, the buy point being 324.87. Now, why is the buy point important? Well, the reason, of course, is because the way stocks trade is that they'll come up to a high, that would be the buy point, then they will base, and then they will make a move if it's in the right area going up. Now, you'll notice they just came through earnings. Very nice earnings there, up tremendously in there. So let's look at the earnings, kind of what happened with the earnings. I'm going to show this to everybody on TikTok as well. This is the earnings that they just announced. Their sales were up 81%. Their profits were up 108%. That's pretty good. And we have some very, very nice estimates. By the way, we're seeing profits in this company go up 70% this year, and next year the estimates are for 24%. So very, very strong. You'll notice it's a fairly high PE ratio here at 69, but the cash flow is strong and nice return on equity of 74%. So this one is still buyable if we look at it. Now let's take a look at the checklist to just kind of go through everything here and check up on the checklist and see if we can do that here. So going back here to the chart, there we go. On the checklist, it's looking pretty strong. It's 100% checklist, if you'll notice. So it's got earning EPS rating above 80, relative strength above 80. By the way, this is the 80-20 rule. We're always looking at stocks that are in the top 20%. So that's definitely looking good. This one is being accumulated by the major funds. That's very significant. We have more than 5 funds that are in it, and we are very close to the all-time high. So this is something that we might want to take a look at, a stock that we might want to take a look at. Currently, there's 57 funds in this one, and it's looking pretty strong. So this is one you might want to put on your list. This is the stock of the day. Now, I don't own this stock currently, just so that I want to be, I want to fully be, fully describe kind of what my position is here. I don't own this one, but it's in a top area, In-Phase Energy. So definitely want to possibly take a look at this one. I also today have another stock, which I think is going to be popping up tomorrow. We're in earnings right now. This is a company called Vertex. It's a pharma company, and it's looking pretty good. This is the checklist here. Let's pull up the actual live chart. VRTX is the Vertex is the is the name of the company. It's doing quite well. We're still in the buy zone here, which is very interesting. The pivot on this one, 304.26. Currently, we're at 310 with a upward trending. If you'll notice this relative strength line, that means that this is getting stronger against the rest of the market. So that's looking good. Nice volume buying action coming in here as well. And we're currently in the buy zone. So, what is the buy zone, and why is that important? Well, if we look at the pattern that it's forming, we are 2% above the what they call buy point. That's the pivot, and it's off of a flat face, the pivot being at 305.95. So we're currently at 310 65 after hours, and it does look pretty good technically. If we look at how it's trading against the indexes, it's 3.73% above the 10-day line, 4.5% above the 21-day line. So that's not a bad place to be buying this. They're going through earnings tomorrow, so we usually want to wait for earnings, see what happens, and not buy within the first hour. And then if it shows strength, then we can jump in, kind of ride the escalator up there a little bit, and hopefully make some money. So this one, Vertex, VRTX, is the symbol on this one. So definitely want to take a look possibly at that one. Here's what I've got currently. As you know, I've been moving back into the market. These are the issues that I currently own. ExxonMobil, of course, it was up today about 1.21%. AEHR, this is a company that is in the semiconductor space, pretty strong, but it is flat today. EI Lilly, this has been my big winner of today. They're going to be reporting basically in 6 days. So there's still probably some time on this one. I don't think this is extended yet. LLY Lilly, they're potentially they potentially are going to have a pretty good earnings. That's what I'm expecting. ASML, a little bit disappointing today, was down about 0.40%. And UPRO, and this was the one I was talking about. This is the index fund. So this is similar to the spider in that it is the S&P 500. So that one was down a little bit today too. So we were up 3 days in a row, pulling back a little bit, but I still think because we're in a confirmed uptrend, you can be in one of those one of those index funds. Now, here's the thing: the further you get away from the day that it moves from a marketing correction to an uptrend to a confirmed uptrend, it's going to be a little bit harder to catch. Let's take a look at the UPRO really quick on this. UPRO. This one is like the spider, but it's a little bit amplified, so it gives you a bang for the buck. Now, here's the thing about this one: it came right up to that 50-day line, and it got a little bit of a rejection there. So that's kind of what we got to watch out. Hopefully, we can break through that 50-day line going forward. But right now, since Friday, that's where we've had the since Friday. That's when we had the confirmed uptrend. Basically, what happened was the UPRO came down and it bounced off the 10-day line, and then it's moved up since. So that is essentially that's essentially what is going on with that one. All right, so let's go to the next thing on is the ready list, and then we'll get to everybody's questions. But I wanted to put this out there for everybody. We have a ready list of stocks, which may be you might want to take a look at. Very easy to get a look see at this one. Just go to https://bit.ly/DTF underscore, and you can't see it here, RL. And the reason that's important, of course, is because this is where we can, I've done some of the narrowing down here of I've done some of the narrowing down here of the stocks, but this is a list that you kind of want to look through. In a confirmed uptrend, these are going to start making some more sense. So definitely take a look at this if you can. Kind of a nice little, kind of a nice little list, and that was updated. All right, well, let's get into some of the questions. Thanks for holding, everybody. Appreciate it. There we go. Have it over for people on YouTube. Great, and here we go. All right, so let's see. Charles always Did you get into AZO, Axion? No, I wish I did. I wish I got into these, but let's look at these 3. These look like very good candidates. Let's first look at AZO here, and let's look at that. All right. Um, so here we are. This is AutoZone, another really, really great stock. I didn't get into this one. Instead, what I did is I bought Lilly instead of AutoZone, but this is just excellent. By the way, in downturns, in recessions, auto parts companies tend to do well, very, very well. Genuine Parts is doing very, very well. AutoZone, and so there's a lot of them. This is a terrific stock. It's a little bit pricey at 24.63 a share, but it's looking really good. It's in the buy zone. So even if you just bought 1 or 2 shares of this, I think this would be a good buy because take a look at this. Take a look at this checklist, strong checklist, 78% on the technicals, is looking very, very good. And I think by and large, this is absolutely viable if you want to start wading into the market because this stock is going to probably fare very, very well in this kind of a downward market. Let's take a look at kind of where they've been. Uh, the last quarter, which was in August, the sales were up 9%, profits were up 17%. That's solid. Look at how many funds are in this one. 23, 25 funds are in this one. 54% of the stock is owned by funds. Cash flow per share, this is unbelievable. 119.90 a share, which is unbelievable. The PE ratio, 21. So basically, very good, totally good stock all the way around. I totally agree with you about this one. AXON, let's look at that one too, just really quick to see AXON. There we go. And this is the one that makes the taser, which, if you're not familiar with, this is law enforcement is obviously law enforcement, big customer for this product. Okay. Um, they make the taser, and let's go back. There we go. Let's see if we can get that in so that everyone can see it. Right, there we go. Okay. So I'm gonna go over. Yeah, there we go. Showing it for the people on TikTok. This one not quite as good a move. This one's extended, so you probably AXON. I would be a little bit careful buying this one just because it is extended. So AXON is extended, so no buy. So that's one of the things. This is a tough market, and basically what you've got to do in a market like this, of course, is that if a stock is extended, you just really have to pass on it and wait for another one to set up because this is not like the market was 2 years ago. It's a very fragile market. This uptrend may not last that long. Maybe it will last only a few weeks. So we don't want to buy our stocks extended. Unfortunately, AXON is extended, so we can't really buy it at this level. Unfortunately, it's not giving us really an opportunity. So we got to stay we got to stay out of this one, even though it is a very good stock. All right, let's look at Meta. And that's Go Videos. Excellent. I'd be really careful with Meta because I just think I just think that the house of cards may be coming down on this one soon. This is the chart for Meta here, and it's pretty dismal as we can see. Let's jump on over to the earnings statement here to see where they're at. Now they haven't reported yet. That's coming up. It's coming up. Well, actually, it should be. We should have had it. Yeah. Okay. So yeah, here's the tail, and fortunately, we're been uh, down 1%. Earnings down strongly, 32%. Let's look at the daily. See if we can get some after hours information. Yeah, it's diving. It's going down. Yeah, this was my fear with Meta. After hours, this is just getting clobbered. It's down 19% approximately after hours, and it was down during the day too. It was down, almost 6%. Heavy selling going on in this one. I think Mark Zuckerberg is going to be a lot poorer by the end of the week. That's what it's looking like to me. I just would be really careful on this one. I don't know if it's a short because I think you want to see a rally before it shorts, but this one's just diving like, most of the problem right now in the market has been in the software area. This will be the third major miss with Microsoft, Amazon, and now Meta. So not looking good there at all. Just a real bloodbath going on. Charles tends to look at BABA, which BABA had improved a little bit. I heard they're going to cut back a little bit on the government in China, but I just can't get excited about these Chinese stocks. Yeah, it picked up a little bit. It traded up slightly, but it's off after hours. I just think this is a dead cat bounce. This one is, I think, shortable. To be honest with you, I'm not shorting it, but this one's shortable. I definitely think this one's shortable. I think we're going to see some more weakness in the Chinese market, and I just think that if you're not shorting it, then you probably should stay out. It's just very tough, very very tough. Um, Now, but with all that, with what we're saying, all that is bad. There are some that the medical area is doing very very well. I want to take a look at the XLV. This way we could get in on that one. XLV, of course, a lot of things are a lot of stock, a lot of shares are reporting this week, but this is where the strength kind of is sort of moving in the is sort of moving in the market right now is is to the healthcare area. And one of the great things about the XLV is that we can get exposure to the whole sector at once. This is an ETF. This is up after hours. It was up in the pre. Uh, it's moving above. It's very significant because it's moved above the 200-day moving average. It's still below the pivot. The pivot is 134 right there. That's the pivot. And I think that we probably, at least in this upturn, we're probably going to see some power in the healthcare area. And this is one of the ways you can get exposure to it. Now, of course, you're buying the whole sector, so you're going to get the dogs with you're going to get the thoroughbreds and you're going to get the dogs, but it's a good way to, where you don't have to choose. Now, I'm currently in Lilly, and of course, that's one of the stocks in this sector. And as you can see, that made a very nice move here. But right now, you can't buy Lilly, and the reason is because it is moved out of the buy zone. So you don't want to buy an extended. So really, you can't buy any more Lilly because it's gone. But you can buy the XLV and get exposure to the healthcare sector. This probably is going to be one of the better sectors in the market now. I think that it's going to be between, it has been the oil sector up until now, about last 7 months, but I think that you're going to see some strength in healthcare and going forward. So that's one of the things you can do. With BABA, I'd be really careful. I'd be careful about buying any Chinese stocks long, maybe shorting them, but not going long. I just think it's very, very risky just because of the political situation more than anything else. I think that's really the area that you have to be concerned with there. All right, let's look for Doc. Always great to hear from you. Is it too late to do an ETF strategy? No, absolutely not. It's still okay to do the ETF strategy. Absolutely. Let me show you that again. I know I'm reiterating here, but this is a really good strategy. You don't have to use it for 100% of, your of anything, but it's a good strategy. Here's how it works. It's super easy. You want a market index like the Spider or possibly the QQQ. I'm not into the QQQ right now because the technology sector has been weak, and there's a lot of weighting towards, Microsoft and those kind of firms. So I'm not doing that. I'm doing the Spider, which is more general, and I'm actually using the U Pro, which is essentially a 2x on the Spider. But the Spider is definitely what worth using. I definitely think we're likely to see this run a little bit more. So I definitely think you can still get into this strategy, and then basically again, just I know I'm being reiterating here and again, but uh, if you need to know kind of where it's at, just look at the thumbnail on just look at the thumbnail here, and you'll see you'll see on the thumbnail for the show, you'll see a little circle there, and this indicates that it's in a confirmed uptrend. But I definitely think you could still get in with the ETF strategy. I probably should be putting that out to everybody on text. I'm still trying to figure out how to do that technically, but I think that might work really, really well as well. So yeah, not thanks for that question. So appreciate it. All right. Let's go to Go Video. Twitter could go up more than could it go up more? I don't know. You see, Twitter is another one that I am very, very concerned about, just because it is very political, obviously, with Twitter. And because I have absolutely no inside information, this one is always trouble. Now, here's what's happened with Twitter. It has moved above that buy point, the 52.30 buy point. Of course, this is on the speculation for the Elon Musk purchase. I would not be in this one, just because I just think there's too many things that can happen. I would just be careful. I know this was, here was the big announcement, and it popped up, but we could definitely lose support here. So I would be really, really careful with Twitter. I would stay away from it. Let's go to a sector that's stronger. Here's the problem with Twitter and many of the software-based companies. This cycle, I don't think that we're going to see the strength from this area. I think we're going to see it in a different area. Possibly, we're definitely going to see it from the oil and gas area, and definitely going to see it in the healthcare. Let me just give you an idea of why I think this, and this is kind of this is kind of the relative performance of each area. So let's go over here to let me change that out for everybody. Let's see. Did I get that right? No. I'm trying to. All right. So, all right, we're going to move that one out, and let's go over here to the XLV. This is the healthcare spider. Let me show you that. And then what I'm going to do is I'm going to compare this against several of the other ones that we can get into here. So let's remove that. Let's go back and add. Let's see. I got to give me a chance to add it. There we go. Stop. And what I'm going to show you here is the comparison of these different sectors of the um, of the market. Shifting back here for there we go. So we can see this on the live screen here for Twitter. Okay, this is the XLV. This is healthcare basically here. And then let's go to, so this is basically healthcare here. Let's look at the tech sector. Let's look at the oil sector, which is the XLE relative performance. You can see this is outperforming of the healthcare sector, but comparing this to the technology sector, XL, um, hmm, XLT, I think it is. Yeah, is that right? XLT or all right. Let's just the QQQ. That's going to give us the okay. So here's what I'm trying to see. As we've gone through the year, I'm gonna go for the last since July. Oops. This kind of compares three separate things. This is compares the QQQ versus the XLE. Now, the XLE has been the outperformer. This is the energy sector, and this is where we ought to be looking to do buys as well. But the sector that's starting to show strength is the XLV, which is the healthcare sector. And I do think that this, because we just turned up, I think that this will be one of the new leaders will be the XLV. So I think we ought to be, we ought to be looking for opportunities primarily in the healthcare sector as we go forward. So that's kind of my take on it going forward. So go ahead and all right. Charles is saying MCK. Wait until pullback. Got it. Oh, nice 365. This is McKesson. I definitely think this is a quality stock. Everybody, this one I really like. So let's bring up McKesson MCK. This is one of the big mega cap healthcare stocks that I think is going to be a leader in this next uptrend. And this is a tremendous stock. So let's see, you got in at 365. Let's look at that. Wow, that's beautiful. 365. Look at that. Look at that. That's very good. That's all the way from basically that's buying it right out of the base. You can see this is what they call a consolidation, and it moved above that 50-day moving average, and then boom, you're just right into the. This is still buyable, by the way, for everybody that didn't get it where where Charles got it. Charles really made a good buy here, but look at that. Look at that gain. It's 1, 2, 3, 4 days, and he's up tremendously. So that is an extremely good buy. It's up after hours too. So I think you could ride this. Definitely, I agree with you. I think you could ride this up to 400. I would probably, pull the plug there just because this might get a little bit too ahead of itself, might get too excited. But currently, right now, McKesson in the healthcare group is doing well, and it is basically in the buy zone. So you could still buy it at this level. So very good. Thanks for sharing that. I really appreciate it. That's a great stock, MCK. I got a penny stock that seems to good. Yeah, I mean, I'll try this penny stock, SHMP. I'm not familiar with this, of course, so I don't trade a lot of penny stocks. Let's see, S SM S let's see, it's SHMP. Is that right? MP. Yeah, there we go. So let's see. Hopefully, no, it doesn't let me see it. Unfortunately, SHMP. Yeah, unfortunately, I can't get this one for you, Troy. I wish I could. This is, this is it. This is fortunately this is just a. I just don't have access to this. It's probably a pink slip stock or something like that, and I don't have access to it. I wish I did. I would definitely do it if I could, but I don't have it, unfortunately. Is oil and gas still the place to be? I think so. I really believe that. I still think that oil and gas is doing well. I think that I've been reading, especially in the East Coast, we're still in a situation where where oil and gas is looking good, especially companies that do diesel fuel. There's a shortage of that. Let's look at MRO. That's a refining company, Marathon Oil, and they're heavily into diesel in terms of their refining capacity. I think these guys are really well set up. I know it's a boring stock, but it's right in the buy zone. and it's come up very, very nicely. Not even an expensive stock at all. It's 30 bucks after hours. Just it's just coming beyond the buy point here, but it's still viable. It's not extended. 98 relative strength on this one. Very, very strong. And it's got a 100% checklist. So I really, really like this. I like everything basically, at least for right now. And this one, it's just a good stock. It's solid. It's not very exciting, but it's solid. Let's look at their results. They recently came through earnings, but look at this. Their sales are up 101%, profits 500%. And this is not, this is a PE of 8, okay? PE of 8 on this. They're showing that their profits are going to be up 200% this year. They've already put in some pretty good numbers, but this looks like their fourth quarter is going to be good too. So this is one that you might want to look at. It's called Marathon Oil. I'm sure you've heard of it. And this is one I still think this is a great place to be, is Marathon Oil, because it's in the oil sector and it's got a really nice setup. So I put this up there for everybody. Trying to get this up there for everybody because I want to share this, because we got to make some money, because this has been a terrible year. We got to make some money, but this one, MRO, and that's in the oil stocks. So this one, I think definitely, is the kind of stock that you want to be looking at. So I still think the best places to be in the market right now: energy and healthcare, and and hopefully we'll get some more. Hopefully this will widen out a little bit, but I'm hoping that we're going to get more. You're going to get wider, but stay in the oil, stay in the healthcare, and I think you'll be really doing good. All right, Brian. Let's look at OVV. This is also a smaller. This is a driller. I think they're in the Permian. That's of course, the area. The area of largest production in the U.S. is the Permian Basin. So let's look at this one. I'm going to go to the daily chart here first to just kind of see tactically where it is. Well, not really forming anything, but it definitely has moved down, and it seems like it's getting some support at the 50-day line. So that's a good thing. Just want to kind of look at this one. Yeah, it's a very strong checklist, 89%. I still think right now, though, in this market, I don't think you want to be in the drillers as much as you want to be in the refiners. I think the refiners are sort of where it's at. So what I'd like to do here, let me just uh, go here real quick and compare. I want to compare some of these refiners, Valero against that's Valero, and then Marathon, and then um, Sinclair. Okay, these are all three refiners. So let me get that up for you. All right. So, and I'm going to go basically back to uh, July. So this is going to give us what it looks like since July. Now, all these have come down. Dyno has kind of stayed the same. They're all kind of, as you can see, they're very closely related to each other. I think these are the better, these of the refiners. These two are the best, Marathon and Valero. So I want to look at Valero just really quickly to see if it's close to a buy point. Not really. The one that's really set up the best is Marathon in this group. So that's really set up the best. This one is in the buy zone, and it's showing a cup with handle action. So very, very good there. So that's kind of the take on it. All right, probably last question here. We're 39 minutes. We got to get rig. Is it getting close to the buy? Let's look for rig for just a sec. Rig. Yeah, Transocean. This is out of Houston. This one, I like this one, but it's just, I like this company, but it's just not set up well, unfortunately. This is Transocean out of Houston. Of course, they build the big rigs. This is a very cheap stock. But even though this is under $10, this is not a penny stock. This is a real company. They've come up. They're trading above the 200-day moving average. But I just don't think this one. I wouldn't buy it. Earnings are in 7 days. I just want to wait for a better setup on this one. I just want to wait for a better setup on this one. But I do think that if it can give us, if it can move above 5, that's when I really start to get interested. We did have some good in the last quarter. We did have some good earnings come in. Sales are up 5%. We're still a little bit underwater, but we do have cash flow underwater. Yeah, right. So I would wait on this one. I would wait. I would wait on this one. It's a good stock, but I don't think it's the time. I don't think it's the time right now for this one. All right. Well, we are essentially out of time. Thank you everybody for tuning in. It's great every time we get that. By the way, if you're not already a member of the Action Trade Alerts, super easy to do. Just go here to www. Dallas Trading Floor. Super duper easy. Please also like the show because that helps us a lot. Getting a get the algorithm to I want to get the algorithm to show it to more people because I know that there's interest out there. It's just I got to figure out how to get it to more people. But smash that like button. That really helps me. Also subscribe to the channel if it's on YouTube, and like it also on if you're watching on TikTok as well. And don't forget about the ready list that I put up. That's on the crawler at the bottom of the screen. And you can also see that by going to Dallas Trading Floor. So I will be back tomorrow at 5 o'clock. Thank you so much, everybody, for watching the show. And happy trading.